Welcome friends and welcome to another video lesson on bank promotion study, and in this video lesson we are going to learn about the social security scheme. So the first being the Pradhan Mantri Jeevan Jyoti Bima Yojana, which is popularly known as PMJJBY, that we are going to see. So Pradhan Mantri Jeevan Jyoti Bima Yojana, this scheme is a 1 year covered term life insurance. So this is a 1 year covered term life insurance scheme, renewable from year to year, offering life insurance cover for death due to any cause. Death due to any cause is covered under PMJJBY. Rupees 2 lakh is payable on a subscriber's death due to any cause. The premium payable is rupees 436 rupees per annum per subscriber, and premium is exempt from GST. So 2 lakhs 436 per annum per subscriber. Previously this was 330, but now it is increased to 436. So don't make a mistake in this. For those getting enrolled under PMJJBY for the first time during the middle of the policy period, payment on pro rata basis is allowed as under. So if in the middle of the year, if they are enrolling for this, if subscribers are enrolling, so for enrollment in June, July and August, entire 436 rupees is payable. For enrollment in September, October and November, this is 342, and in December, January and February, this is 228, and this is 114 if they are doing in March, April and May. So this is the pro rata premium, 342 September. So just see, this is 114 and this is 228, just double of it, and this is triple of this, September, October and November, and 436. Right, so this is the premium, the on pro rata basis, which the subscriber will have to pay if they are subscribing to it in the middle of the policy period. Full year premium at 436 rupees is payable at the time of renewal under the scheme. For subscribers enrolling for the first time, risk starts from the date of auto debit of the premium from the account holder bank account. However, insurance cover shall not be available for death other than due to accident during the first 30 days from the date of enrollment into the scheme. This is known as the lay-in period. So lay-in period is 30 days from the date of enrollment. So during the lay-in period, they will not be paid for death other than due to accident. If this is an accident, then payment will be done. Otherwise, it will not be done. And in case of death other than due to accident during lay-in period, no claim would be admissible. There would be no claim would be admissible other than from accident during the lay-in period, which is for 30 days from the date of enrollment. The premium will be deducted through auto debit facility in one installment as per the consent given by the subscriber at the time of enrollment. The scheme is offered and administered through LIC and other life insurance companies willing to offer the product with necessary approvals on similar terms in collaboration with the participating banks, post offices. Participating bank, post office are free to engage any such life insurance company for implementing the scheme for their account holders or subscribers. All individuals, single or joint account holders of participating banks and post offices in the age group of 18 to 50 years are entitled to join. So age group is 18 years to 50 years. Individuals who join up to 50 years can continue to be the member till the age of 55 years. So this scheme would continue, the coverage would continue up to 55 years. But payment they will have to make only from 18 to 50. They can get enrolled, but coverage will continue up to 55 years. In case of multiple accounts held by an individual in one or different bank or post office, the person is eligible to join the scheme through one bank or post office account only. So only one scheme is from one account only. This particular scheme enrollment is allowed. The cover shall be for 1 year stretching from 1st June to 31st May. So this is the coverage year. 1st June to 31st May. At the time of enrollment, subscriber has to submit his option on the prescribed form to join, pay by auto debit from the designated individual bank or post office account. New eligible entrants can also join in future years on payment of premium through auto debit. However, for such subscribers, insurance benefit shall not be available for death due to any cause other than accident occurring during the first 30 days from the enrollment. So that is the same thing. So this is the lay-in period, 30 days, and their claims would be inadmissible. Individuals who exit the scheme at any point may rejoin the scheme in future years by paying the appropriate premium as described above. However, for such subscribers, insurance benefits shall not be available for death due to any cause other than accident occurring during the first 30 days from the date of enrollment into the scheme. Participating banks, post offices are the master policy holders. So, who are the master policy holders? The banks and the post offices are the master policy holders. A simple and subscriber-friendly administration and claim settlement process has been finalized by LIC and other insurance companies in consultation with the participating banks and post office. The assurance on the life of the members shall be restricted accordingly on any of the following events: on attaining age 55 near birthday, subject to annual renewal up to that date. Entry, however, will not be possible beyond the age of 50 years. So entry is only up to 50 years. Closure of the account with the bank or insufficiency of balance to keep the insurance in force. In case a member is covered through more than one account and premium is covered by LIC insurance company, inadvertently the insurance cover will be restricted to 2 lakh and the premium paid for duplicate insurance shall be liable to be forfeited. The scheme will be administered by LIC or any other life insurance company which is willing to offer the product in partnership with the banks and post offices. It will be the responsibility of the participating bank and post office to recover the appropriate premium in one installment as per the option from the account holder on or before the due date through auto debit process. This is through auto debit process, and transfer the amount due to the insurance company. Enrollment form, auto debit authorization, consent cum declaration form in the prescribed pro forma as required shall be obtained and retained by the participating bank or post office. In case of claim, LIC insurance company may seek submission of the same. LIC insurance company also reserves the right to call for these documents at any point of time. Appropriation of premium. So appropriation of premium where a full annual premium is collected. How this is done? So when full premium is collected, 395 rupees would go to the insurance company, 30 would go to the commission payable to the business correspondent or agent for new enrollment, and 11 would go to the participating bank for the expenses payable by the participating bank. Similarly, for 342 in the second quarter, 309 would go to the company, 22.50 to the BC agent, and 10.5 to the bank for the expenses, administrative expenses. And when 228 is collected in the third quarter of the risk period, 206 to the insurance company, 15 as commission to the BC, and 7 as administrative expense to the participating bank. Here, in case of 114, 103 to the insurance company, 7.50 as commission to the BC, and 3.50 as administrative expense to the bank. So mostly the questions are asked from this table. So this table covers maximum permutation combination of questions which can be asked. So the premium collected and the commission payable to the BCs in the second quarter, in the third quarter it can be asked. So question can be framed on this. The amount of commission payable to business correspondent agent as specified in item 2 saved in case of voluntary enrollment by an account holder through electronic means shall be passed on as a benefit to the subscriber by correspondingly reducing the amount of insurance premium payable specified above. So in case if there is a voluntary registration, then that commission which was to go to the bank with BC, that would go to the account holder, and accordingly the premium would be reduced. This cover will be in addition to cover any of the insurance scheme the subscriber may be covered under. In case of a joint account, all holders of the said account can join the scheme provided they satisfy its eligibility criteria and pay the appropriate premium. Any NRI having an eligible bank account with a bank branch located in India is eligible for purchase of PMJJBY cover subject to fulfillment of terms and conditions relating to the scheme. However, in case a claim rises, the claim benefit will be paid to the beneficiary or nominee only in Indian currency. So NRI is also eligible for PMJJBY. All bank account holders other than institutional account holders are eligible for subscribing to PMJJBY scheme. All these events are covered under PMJJBY. Covers death due to any reason. It covers the death resulting from natural calamities such as earthquake, flood and other convulsions of nature, and even the suicide and murder are covered under the PMJJBY scheme. Are PMJJBY policies being introduced and serviced in association with foreign insurance companies? So this is one question which is asked. So there are no foreign insurance companies directly operating in India as permitted by the Insurance Act and IRDA regulations. There are some foreign companies in joint ventures with Indian companies where the stake of foreign insurers is restricted to 74% only. So FDI is restricted to 74%. Contrary to other life insurance products, benefit under PMJJBY is payable only to nominee of the insured on the death of the insured. The cover under PMJJBY is death for death only and hence benefit will accrue only to nominee. PMJJBY is a pure term insurance policy which covers only mortality with no investment component. The pricing is also accordingly low when compared to other life insurance policies where maturity benefits, surrender value, etc. are available. It has been designed to provide life insurance cover to the weaker sections of the society. With this aim, the premium is kept low, eliminating the investment component. PMJJBY has no surrender value. The surrender value of PMJJBY is nil. Will the PMJJBY scheme, which is being promoted aggressively and sold in large number, accrue huge profit to the foreign insurance company who in joint venture with Indian entities have floated life insurance company and are operating this insurance cover? Only Indian insurance companies as defined in the Insurance Act can operate in India. The policy holders fund of all such companies operating in India, including those with foreign partners within the 74% cap, is to be invested in India as per regulations and cannot be invested abroad. So even if they are having 74% stake, but whatever the amount they are collecting, that is invested in India only. The premium charged for PMJJBY has been worked out based on actuarial calculations considering all risk factors, current mortality rates and adverse selection. Thus there is no scope for any huge profit accruing from the scheme. Why are foreign insurance companies associated with PMJJBY when LIC, which is a government-owned corporation, could have managed this scheme launched by the government? So here there are nearly 24 life insurance companies which are operating in India and they are licensed by IRDAI to carry on life insurance business in India. To promote competition and better pricing and service to customers, all these companies are permitted to participate. Moreover, they are all Indian insurance companies. Their foreign partners, if any, have only a stake in these companies with the stipulated 74% cap. However, LIC is still the primary insurer involved in operations of the scheme. There are no foreign insurance companies directly operating in India. As permitted by the regulation, there are companies operating as joint ventures with Indian companies where the stake of the foreign insurer is restricted to 74% only. By definition, these are Indian insurance companies. All these companies are subject to Indian laws and there is no bar against proceeding legally against them. Insurance is like any other product. While rates can go up in future, with 24 life insurance companies operating in India due to competition among them, prices are likely to remain stable. It is expected that with the design of PMJJBY cover and its pricing, the scheme will be variable and there is little chance of discontinuing. In any event, even if a particular company discontinues, banks have several other options to tie up with. Claim period. Banks should forward claim to insurance company within 7 days of receiving claim papers and insurance company to settle the claim within 7 days of receiving claim papers from bank. So this is 7 days claim period. So bank should forward the claims to insurance companies within 7 days of receiving from the customers, and after receiving from the bank, the insurance company should settle the claim within 7 days. So thank you so much for going through this video lesson on Pradhan Mantri Jeevan Jyoti Bima Yojana.